Good morning, one and all. I hope you are well, and welcome to another one of my videos. So I have 4 pairs on watch today. The market providing plenty of moves this week, or on yesterday rather, but nothing in the way of entries, but we may get one today, who knows. So looking at this on the higher time frames, as I said yesterday, there's not the greatest price action to the left, but we do have some structure which we can see and work with still on the higher time frames. On the daily chart here, I can make sense of what's actually happening here. We have the impulse down, the corrections, and then the continuations. Okay, and we can see that price has just tapped into this area of value where last time around there was an exchange of liquidity, where there was enough of an exchange to cause price to smash through all of this consolidation. So that gives me a clue that's where the liquidity likely is. Last time liquidity exchange hands here, we smashed through all of this. So it's no surprise to me. And that gives me a clue that's where the liquidity is. Another clue that that's where the liquidity is that ever so slightly we near missed to it, which often means that when people are selling here, more liquidity is being placed here as people place their I don't know why my voice always does this whenever I make a video, but whenever people are selling this here, they're putting the stops above here, which means even more liquidity here. And sure enough, we spike above, and now you can see we're potentially moving to the downside. And we also have that element of this reversal structure leading into it, where the impulses of this 1, 2, 3 wave are of a similar length. When the third wave is a similar length to the first, it implies the completion of a move. And if it completes at an area where we would anticipate there being volume, it's no surprise to me that that's where we seem to be responding from. Okay, so on the daily chart, we can see on the 4-hour chart rather, we've got momentum coming in. That implies that price found liquidity where we would anticipate it finding liquidity. As I said yesterday, there's even a little gap here to this high. So when we sold off here, we left a slight gap to here. So what I'll be looking for, I'm not really concerned about this low at this moment in time, because that definitely doesn't hold as much weight as what we've broken above and pushed back beneath. Okay, so what I'm looking for here, we can see a little bit of a consolidation there. Not something that I could get involved in because it was an incomplete structure, but nevertheless, we're seeing evidence of stacking. We're seeing evidence of the bigger players stacking their orders, which is what they typically do if we're going to move in one direction or another. And if we've come from an impulse down, the stacking implies further continuation to the downside. So what I'm looking for, so I'm looking at the size of this move. I'm looking at how this is forming at the minute. And what I'm looking for, I'm looking for a 1-hour consolidation, okay? So I'm just factoring in the size of the drop. I'm factoring in how this is forming. So what I'm looking for is 6 to 8 corrective 1-hour candles. So if we get, that's the first one, the green one there. If we get 6 of these as a minimum, then I would look to get short if I can actually identify the structure. I couldn't identify the structure with this one, but if I can identify the structure with this, then I will look to get short either on the break or within it. Okay, and then depending on whether it's a structured 1-hour continuation or not will depend. For example, if I take the risk entry within the structure like that, whether I get short after a 15-minute or a 1-hour rejection will depend on whether I can see the structure of the flag on the 1-hour or the 15-minute chart. Okay, so we're going to let that do its thing. I have set a Google Calendar reminder to remind me to check all of these pairs, because what they seem to be providing at the minute looks quite similar across the board. I've set a Google Calendar reminder to remind me to check these about lunchtime, just to see what happens. And then I would have, in this instance, I would have 5% to that low, which meets my minimum take profit requirement. So I would set my take profit at the low and trail my stop loss accordingly. We've got that as a first inflection point. But as I said yesterday, if we're pushing to the downside and we've retraced, so if price finds its way down to here and we've retraced about 70% of this move from here to here, then we're not stopping there. It's very unlikely we're stopping there, and we'll likely smash through to this low here, which would be a solid take profit area. So that is Euro Aussie. Euro Kiwi is going to look pretty much the same in some respects. I do actually prefer the fact that Euro Aussie is actually below. Okay, so it's below all of these highs. that we broke above and then broke back beneath. I like the fact that we're below all of that, whereas Euro Kiwi, we are kind of, we're floating at the minute. But it's a similar deal, right? So we've got, I do prefer the higher time frame structure on this one in the sense that we have actually tapped this high. So if you look at Euro Aussie, that kind of reacted from nowhere. But we can see that this one actually tapped this high and then pushed down before it did a similar thing to what we saw on Euro Aussie. I'm going to sneeze. Hopefully I won't. So we have the move down. Then we have this long consolidation here. And look at the gaps. Okay, so we have this. So after this move down, we leave a footprint there and we keep gapping to it. Okay, we've gapped to it here. We've left a bit of a gap to it here. That's implying that this is where the liquidity is as people sell it here. Okay, so we had a bit of a sell-off last time around, which implies liquidity there. We have gaps to it, which implies liquidity there. We have that 1, 2, 3 wave that we saw on Euro Aussie. That implies to me that the stops are likely in this area. And sure enough, we're getting momentum coming into the downside now. Just be mindful of the time. So on the 4 hour, you can see that momentum coming in. Because we've had so much momentum coming in, I'm not concerned about this low here, because you don't normally, it's not normally the case that we, break above all of these significant areas, break back below, and then suddenly this tiny little low there causes price to, we don't normally have a sharp move up, sharp move down, sharp move up, and then it goes. It's just not. Typically, when we have a sharp move up and a sharp move down, that implies that price has found liquidity from somewhere and we're going to plummet to the downside. So what I'm looking for in this instance is the same thing as I'm looking for from Euro Aussie. Same thing again, and then I would look to get short on the break or within it. As I said, ideally we get something below all of this, but I'm not really concerned about this at the minute. You can see the stacking of the orders there. We have the push down, little stacking of orders. That's given me a clue that this is ready to drop. And in this instance, I would be targeting. So I can't get 5% to that low. What I can get 5% to is that down there. So I would measure 90% of this range, the range that we broke above, the low being the ultimate low here of all of this consolidation, and then I would set my take profit actually just at this just above here as well. So I would trail my stop loss accordingly. So that is, as I said, I've got Google Calendar reminders to remind me to check this periodically. This one, I prefer this. I've just got this. I do actually prefer this pair to the other two, but I've got it lower down just because it could take a little bit longer, in my opinion. Although the difference is kind of negligible. But what we have here is we have. So if we just zoom out, we have tapped this low. So if we just mark this on the fly. So although we didn't tap this low here, we did tap an area where there was a very big runoff last time around, okay, implying liquidity there. What's the other thing that implies liquidity there? The fact that we near missed it. Look, gap, move up, come back down. We near missed it again, come back down. That is also implying that people who bought here had their stop losses just below here. Sure enough, we tapped just below, and then boom, we get a similar level of momentum as we got last time around, okay? I'm also looking at things like, for example, so we have this consolidation here. So when we broke this structure here, there was a corrective move down, and the start of this correction was here. Often the start of the correction is where the volume is. Okay, so what gives me a clue that there's volume there? Well, the fact that we near missed to it again. Okay, so we left a gap to the start of all of this consolidation. And also, what we also have is we have this potential 1, 2, 3 leading into it. Okay, we have this structure here. So what we could potentially do is play this as a finishing move to finish off this structure that then taps into this area here. Okay, so that's what I'm essentially looking to do, especially since we've come from a move up. So we potentially have that impulse correction continuation. So this could actually move a lot higher by virtue of the fact that it's come from a big move up, which kind of is another positive as well. Have we tapped into anything of significance? Yes. You can see without me even drilling down that there was a big move from here, okay, from this area here, and we came back down and left a bit of a gap to it, implying liquidity there. We tap the gap, we tap just below here, and then we get a very impulsive move up. When you see these bullish candles that close like that with bullish a bullish body and a big wick below, that is implying a big washout of liquidity. And these, you don't typically see these, and then price just comes, plummeting to the downside again, unless we've kind of gapped to this low, or we've just literally just tapped into it. We did ever so slightly break below, and you can see we're getting more momentum to the upside. So what I'm looking to do, as I said, is finish that move see if I can finish that move to the upside. What do I like about this? I also like, so there was no entries here, but what I like is the fact that we are correcting just above where there was a lot of volume. Why was there a lot of volume? Well, because last time around we had all of this consolidation. We had a little bit of consolidation here. We sold off aggressively from there last time around, likely because we retested the back end of all of this. The sell-off implies that there's liquidity here. So what we can potentially do is use this sharp move as protection for our stop loss. So, for example, if price was to give me what I'm going to be looking for today, let's just move that a minute. So if we get something like this, so if we get a 1 hour consolidation, structured or otherwise, and it retests the back end of this, we can kind of use the put our stop loss just below here, and likely if we retest that, spike it after forming something like this, we've likely retested a lot of this volume and generated enough volume for price to continue moving to the upside. And then in this instance, if we would have that, in this instance, just because of the size of the move, I wouldn't be looking for an entry on the break, because a lot of these flags after such a big move can do something like that, and then they can form slightly larger versions of themselves, something like that. So by taking the risk entry within the structure, you can kind of manage this and get your stop loss to break even if something slightly larger occurs. Okay, so that's the logic behind here. But if we retest the back of that and form this, I think that's still quite unlikely. But so what I'll be looking for is the risk entry within the structure, and then I would have 6% to work with, likely to that high there. Okay, the start of all of this move. Okay, so that's what I'm going to be looking for on Kiwi dollar, and I would set the take profit either likely just, what would I do here? So I would measure the range. Let's try that again. Do it there so that it doesn't keep doing that. Would we have 5% to there? No, we wouldn't have 5% to there. So what I would do is I would actually set the take profit at the high and trail my stop loss. So that is Kiwi dollar. And last up is Aussie Kiwi. Aussie Kiwi looking less likely to shape up at this moment in time, but we don't know what the market's going to do. So one of the things that I see on this is that, so if we just analyze this, so we have the big sell-off last time around, price comes back up, it leaves a footprint. The footprint ever so slightly, if we were to measure this, I think it ever so slightly near misses here. So there's likely, if people think that this, when it breaks below here, they think that this is now resistance, they likely have their stops just above. So as we come back up and we sell off, people likely put their stops above what they believe is resistance. We come back up, we tap into the area, we do so correctively, we spike just above, likely tap out a lot of those stop orders, stop losses, and then we move to the downside. So we don't necessarily need to come up to here anymore. And what we also have, we've tapped into, it's a bit more prevalent on the 4 hour chart, but we've tapped into an area of liquidity there, and we did so structurally. Okay, and we have this bearish candle shape formation. So we have the bullish move up, the stall in price, and then the bearish, this is a very bearish formation, which is implying to me that we could be capitalizing on a move to the downside. If we just zoom in, you can also see, so if we just get this off the chart a minute. So you can see the reversal structure at 1, 2, 3. Price does something a little bit atypical, but it does a, we have another reversal structure there. So we have the 1, 2, 3, which taps into this. Then we get the aggression to the downside. I like this 4 hour candle. This is a very bearish, this in itself is a very, very bearish formation. We spike just above here. Same psychology again. We near miss to this high. We near miss to it again. People selling here likely have put their stops just above here. The stops get spiked out. Impulsive momentum, impulse correction, potential continuation to the downside. And these two last candles at the moment, with the big wicks above them, but bearish with big wicks above them, are implying to me that we may be getting more downside, okay, as opposed to responding from this low and then moving to the upside. But we shall see. We are moving down correctively, but even so, even if we just measure, if we analyze this, we have a structure here, near miss to there, we spike just above, likely where the stops are. We kind of tap into this. If we were to analyze this on the 5, it gets a bit messy on the lower time frames, but that is a characteristic of Aussie Kiwi. But you can see it is responding to structure. So because it's responding to structure here, and the fact that it's provided this voluminous structure just above here, that's not normally the case. That when we build volume just above a low like that, it's not normally the case that we respond from that low. The volume normally implies that we're going to get a completion of this impulse correction continuation, which would take us lower, because the 1 and the 3 wave tend to be of a similar length. So with 4 minutes of this video remaining, what I'm looking for in this instance, I'm looking for a 1 hour structure once again, but I'm looking for it below this low. Okay, I don't want to be messing about here. I want to see a break below. As I said, it's not looking likely at the minute, but we could just drop out. If we do, and we get that structure, then I would look, once again, because of the size of the move, I wouldn't be looking for entries on the break. I'll be looking for the risk entry within the structure, and then I would be targeting that low down there, because I can get my minimum 5% profit target down to there. Okay, and then I will trail my stop loss accordingly. So that's what I'm going to be looking for today, folks. I hope you've enjoyed this video. I've just taken you through pretty much the entire thought process that goes through my mind when I'm forecasting in the evening and the morning. But obviously that comes to me a lot quicker. It's a lot easier to think these things than it is to explain them sometimes in words that are palatable and comprehensible for others. But we shall see what happens. If the market provides an entry, great. If it continues to not provide an entry, I've not had anything, literally 0 entries for a couple of weeks now. If that continues, I don't really care. I'm doing very well away from trading. And if I make money from trading as well, great. If I don't, couldn't give a monkeys. Right. See you soon, folks. Hope you enjoyed this, and I'll see you in the next video.